Welcome to the National Investors Monthly Commentary. During the month of January, the MENA markets suffered in line with the rest of the world as the S&P Pan-Arab Index lost 9.5%. Concerns around the Chinese economy coupled with the continuous drop in oil prices were the main reasons behind this severe drop. Egypt and Saudi Arabia were the worst performing markets. Divier, can you please shed more light on the performance of those markets?
Egypt market declined 14.5% during the month, which is almost in line with what we saw happen in global and regional markets. The Central Bank of Egypt announced that it is aiming to cut down the country's import by around 25% in 2016 by imposing import controls on the unnecessary goods. The central bank wants to cut down the imports by $20 billion to boost production and to stabilize inflation. We believe rather than devaluing the currency, the central bank is looking for options to protect the currency, which is not in line with what investors want.
How about Saudi?
Saudi markets declined 13.2% during the month, mainly due to decline in oil prices. Brent oil price went down around 6.8% during the month. Also, the investors continued to react negatively to the expected cost escalations of Saudi companies due to the cut down of subsidies in December last year. Results for retailers such as Zarir, Hokair and Extra were also below expectations, either due to like-for-like sales being flattish or margins below expectations. Banking sector earnings witnessed a slowdown as earnings for the fourth quarter of 2015 only grew 3.8%. For the full year 2015, the earnings grew 5.4% year on year when compared to an increase of 12% in 2014. Loan growth momentum also slowed down as the loan growth for 2015 turned out to be only 8.2% when compared to a growth of 12% in 2014. Some sort of a liquidity squeeze was also witnessed in the sector as deposit growth remained subdued around 2%, and the loan to deposit ratio trended upwards towards 82% compared to 78% in 2014. The cost of risk increased slightly to around 73 bips in fourth quarter of 2015 compared to 60 bips in third quarter of 2015 and 54 bips in fourth quarter of 2014. We don't have complete details in terms of the complete results, but we believe this could be due to the increasing stress in the asset quality or maybe banks taking in precautionary provisions.
Both UAE markets, Abu Dhabi and Dubai, were more resilient as Abu Dhabi lost 5.9% and Dubai lost 4.9%. Can you shed more light on the performance of those markets?
Abu Dhabi and Dubai markets were supported by strong results from some of the major banks. We believe before the results were announced, market or investors were concerned about the asset quality, and also they were expecting cut in the dividends. Although UNB and NBAD witnessed a significant increase in the provisions, but the likes of major banks such as Emirates NBD, DIB, ADCB and FGB, they reported better than expected earnings. Also, there was no sign of stress in the asset quality, and the dividends were almost in line or better than expectations.
During the interview with the Wall Street Journal, Prince Mohammed bin Salman mentioned that they are thinking, Saudi Arabia is thinking of IPOing its largest asset, which is Aramco. Can you tell us more about it?
The country is looking to monetize its asset to fund its budget deficit. Saudi Aramco has oil reserves of around 260 billion barrels, which is 10 times the size of ExxonMobil reserves. Also, the company is producing around 10 million barrels a day. The valuation of the company could be in trillions of dollars, and it can actually increase the market cap of Saudi by a significant amount. However, we think given the current oil prices, the company may not list its upstream business, and it may look forward to list its downstream business.
That was it for this month. Thank you.